go with because it's been on long enough for me to study different things and make a decision. So, you know, I'm going to be looking at the moving average strategy, trendline strategy, and the ICT strategies today and try to put them together and see which one works best for me. We're trading the MES, that's the S&P micro contracts, futures contract, but these strategies work with anything. They work with anything. So if you trade stocks or whatever the case may be, they still work. Um, Going with a higher time chart on the tick charts, you can use minute charts. You can use whatever you want, really. You can use whatever instrument you want. You can use whatever time charts you want. But for me, I'm using the tick charts. And I'm going to go right to the weekly chart here and take a look at what's going on. To me, that's incredibly important and a priority that we must know the direction that we think the market's going to go in. So which way is the market going to go in? I have no idea, except for it looks like it's going up right here. And we marked the high of last week and the low of last week, and we're looking for possibly a pullback or a breakout. And, at some point it's going to pull back, but we don't know when. Here's the markings of the previous day's high and low. And again, we don't know if it's going to rotate down this way or if it's going to go straight up. So bias is up, bias is bullish, bias is long. And so we're going to go down a little bit. Now this 10,000 tick chart is like a 15-minute chart. So I'm going to take a look at the 15-minute chart or the 10,000 tick chart here. And we can see with the moving average trendline strategy, the best way for it to work is on the 10,000 tick chart. Here we go, 10,000 tick chart. It's like the 15-minute chart. This is 5,000 down at the bottom. Okay, so we have the 10,000 tick chart up here, the 5,000, the 2,000, and the 1,000. And we sometimes will switch to the 250 if we want, but we're trying to figure out which way this thing wants to go. And I like trend lines. I like trend line breaks, and I like moving averages. So with the moving average trend line strategy, you want all the moving averages going in the same direction, and that's what's going on here. All the moving averages are expanding, are heading up. All the moving averages are heading up. Heading up and heading. Now, eventually they're going to cross and come down and look bearish on the lower time charts. So what we have here is on the lowest, on the 1,000 tick chart, we can start drawing our trend lines. We're going to be looking for trend line breaks, and it's going to look bearish. The one we do not want to look bearish is the 10,000 tick chart. So we have strategies to where it pulls back on the 20, which is what it's doing now. 20 moving average. And we have strategies to, if it pulls back to the 50. So we have the 20 EMA, the 50 EMA, and the 200. We have strategies for both of those, all of that really. But as long as these moving averages don't cross under one another, and as long as price stays above the 200, we are bullish. So here we are on seeing it bounce off the 20 EMA. It's bouncing right now off the 20. And we're looking at all the time charts, and we're looking for a trend line break, and we're looking for patterns. Trend line break, there's a trend line, so it hasn't come up to that trend line. Now, if we would have seen the bounce earlier, we could have looked at this pattern right here. It's pretty good pattern, actually. And the range for the breakout would have been, see, this is exactly what it does. This is exactly what it does. You get an idea of a breakout consolidation area, which is this right here. And notice what price does. Manipulation. It goes up over the top, making you think it's going to go long. It goes down on the bottom, shaking everybody out, and then it goes right back up over the top. Right? I do believe this is going to go bullish, but the shake, I'm glad I didn't get in the shakeout. The shakeout has to happen. The shakeout definitely has to happen. And if we're bullish and it's going to go over that daily high of yesterday, the previous day's high, then we need to really consider about how we're going to get in this thing long. And the moving averages are all agreeing that it's going up. And it's bouncing off of the 20 EMA. The problem I'm having is that there is a big stretch out. The moving averages have expanded so far. It's not like we're catching it down here on the rotation. So it's got some movement already off the 200, and so it's possible that there will be a correction before. I mean, this could come all the way back down. Let's take a look at what do we got for the Fibonacci retracement here on the 10,000 tick chart. See, it's only up at the 23 off that move, and I haven't even gone down to the bottom part. I'm just using this last push, and we see 23% pullback. That's not very much, but it's not very much. But if we keep our stop loss tight and we enter into the trade, we should be okay, even if it goes against us. Right? Even if it goes against us. Let me take a look at, let's look at the 60-minute chart. Here we go with the 60-minute chart. It's just has not pulled back very far. And it may not. It just simply may not pull back very far. But then again, markets like to trip out on you. So I'm interested in this area. I wish I would have, I don't know. I like to try it right here. Like I said, I might have got shook out of that if it didn't go up all the way. And here's another opportunity to try this, really. It hasn't broke that trend line yet. It looks like it wants to break that trend line. And if we got green taking out red, it's worth a try here. I think what I should do is I'm going to jump in it.
Order filled.
And I'm just going to put my stop underneath this last test to the downside here. And if I wanted to keep my stop loss real tight, I could keep it underneath this candle that just tested these moving averages. That's another area to keep it. Reason why I'm taking this trade is because everything's bullish. Everything's bouncing off the 20. Everything's looking rotational. We got a nice pattern here. It's already done a whipsaw activity. It could do it again. It seriously come back down to this area here. But since it's already done this fake out stuff, I'm thinking maybe we'll at least get 1-to-1 on this to the upside. It still definitely could pull back a lot, that's for sure. And we don't know. So I'm just going to wait patiently for this to develop here on the 1,000 tick chart. You can see I'm using my demo account. And I hope that we at least get 1-to-1. Let's see what that 1-to-1 would be. We gotta, all right, something like that. Let's draw some more trend lines on these other ones here. At some point, I got to get enough courage to just go with a strategy, use it the best I can, and transfer into real money once I feel comfortable and confident with it. My problem is I have not settled on one strategy. And I don't really want to have to settle on one strategy, but I don't see any other choice right now because there's always something to learn. There's always something new to try and experiment with. And if I stay in the experimental stage forever, I'm never going to get to where I'm producing enough money to pay my bills. So whether this passes or fails, I'm going to stay in this trade until it works itself out. And I'm excited to see what's going to happen even if it loses, because we may get another attempt later on. We're going to be getting into the silver bullet moment here soon, so it's almost into the macro moment, 10 till. And it may just decide to make a big move before I gotta try. Can't move your stop loss. You cannot add to losing trades. This is something we have to master and maintain. Do not move your stop loss. Do not add to a losing trade. Now, if we're going to average in our price, it has to be part of the plan from the beginning. We have to say, okay, I'm going to start my position here. And then when it drops down, I'm going to add to my position and know exactly what the risk is, know exactly where you're getting out. And this has to be pre-planned. So part of me wants to learn how to do that and manage that properly, because getting in at the right moment all the time is not always going to work. Green lines. So let's think about that for a second. If I were to get in, here and it drops down to here, and I say I want to get in even if it sweeps lower, and say I'll add to my position here, that would make my average price, let's see, it's not that hard to find 50% here. There it is. Yeah, right there where my stop loss is at. And then how does that work? If I wanted to do that, then I would know ahead of time that that's where my average price would be. So I'd have to kind of estimate, hey, I'm going to probably be getting in this trade down here, and that's a better entry. But I'm having to have two contracts to do that. And then the next question is, let's say I get in down here where the price is much better, and it keeps going against me, right? I have to know exactly where I'm going to get out of that trade if that happens. Okay, so if I get in up there, okay, let's do this. So if I get in here, I add to my position here. My average price is here. If my average price is here and price is down here already, when I add to that position, then I'm already down. I'm already down. So I have to figure out how much further down is going to be my actual stop loss, because you can't just keep adding. If it's part of my plan to add to the position if it comes lower and get an average price that's lower, if that's part of my plan, I need to have my risk already figured out on that. I can't just do it blindly without thought, without thinking it through. All right, so yeah, okay. So I guess we'd have to go by ticks. How many ticks would it take for me to finally get out of that trade, and what's my maximum dollar value loss on it? Now see, if I would have put my stop loss up higher, right on that small little consolidation area that I was thinking. I'm going to make this bigger. This is the one I'm trading on. I just need the other ones for reference. Let's take a look at this. Now, yeah, if I would have put my stop loss, yeah, I would have been stopped out of this trade already. If I would have used these candle pieces right here, and that's probably what it's doing. It knows where people are putting their stop losses. And what's great, we got to get on the side that they're on. Wherever they're expanding from, those areas are going to be protected for a while if it's expanding up, if we have the direction right. I mean, look at this pattern right here. This looks really good. But that doesn't mean anything. Doesn't mean it's guaranteed. So I do want to meditate and think about that a little bit more in terms of adding to my position, planning that whole thing out with 2 contracts rather than just 1 contract, averaging my price in at a better price. And I want to mark this out. I want to think about this. So I'm going to take a Fibonacci, drop from the original entrance down to the added price. Where's the 50% one at? Load the 50% one only. 50% only, okay. 50% only. Let's take and measure that down one more measure here. And that would be where our stop loss is at right there. Okay. Stop loss would be down here. So yeah, you pretty much have to go from, I would say that it makes sense that stop loss is equal distance from the add to the new average price. All right, so if I added here and my new average price is here, the distance between there and there is going to be where I stop out if it keeps going down. You can't keep adding. Can't keep adding. I wonder if I could do that even in this trade here. Try it out. Because that'll give it some room to correct another leg down if we don't have the timing right yet. So you could see, like, yeah, on the 5,000 tick chart, if it wants to come down, you know, just see it's gone here, 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 here. And if it wants to do that again, then we have, I wonder if we could get just enough room to make that work. You know what I mean? So that would be the purpose of that. But the risk management has to be all in place. Risk management. Stop loss is equal to the distance from the add price. Let's change that from the add price to the average price. Stop loss is equal distance to the distance. There you go. Okay. Stop loss is equal to the distance. Let's do this. There's the average price. There's where we would add. Let's change this color. Let's see what we got here. Two. All right, let's go with green. Add price stop loss. All right, we're going to call this all right, there we go. Okay, so that's this is the idea here. So this is the distance between where I haven't done it yet, but I'm just speculating that my stop loss is under this pivot right here at the moment, right where I should be adding, or right where I want my average price to be. Meaning I got in high and I want my average price lower. I wish I would have got in down here. If it never comes down. Now this is a good plan, because if price never gets to where you're going, you miss out on the trade. And at least if it goes from where you got in, you got some profit. That's the idea behind it. If you get in high, it's because you don't want to miss the trade. You don't want to get in with a full amount. So you wait for price to come down and sweep, which is, I would add to the position down here after it sweeps. And, you know, it's already bounced off it would have to come down and penetrate this area here. And the point is that it would lower my average price to where my stop loss is at right now. It would lower my price. Copy and paste. So yeah, stop loss would be here. and you have to get out because now you're holding two contracts instead of one. So that makes everything a little bit more tense. A little bit more tense. All right, so the silver bullet is now. We're in the silver bullet moment. 10 to 11 a.m. Eastern Time, New York City. Let's see what it wants to do. It's choppy and slow. That's not a good thing. Yeah, I'm gonna have to. I'll take pictures of this later. I'm not gonna try to do it right now. Keeping an eye on the old day chart. I like how it's holding up top here. That's a good thing. Holding in the upper third of the candle. Seems quite bullish. I like that last hour, looks good. That candle right there. If it can maintain that and keep going, it did come down to this hourly fair value gap right here. All right, I got my stop loss in place. I'm gonna go get some coffee. There's no rush. This is helping me stay in the trade and not do stupid things. Recording this is very nice. I mean, that's what I could do. I could just put the thing up higher. some disagreement. What do you think? I mean, I'm not talking about Q-tips here. You know, and they just leave it over complicated when we can look at it. Wait a second. But this is a disagreement rule. Cookie. Cookie. We'll see. The question we always ask ourselves is my stop in the right place? Because I don't care what they say, even the ICT strategies have to put their stop somewhere. And the question is, did we get in on the right side of the algorithm or the market makers? Because when they generate liquidity as they move in a direction, those pivots are protected temporarily, at least for a while. And if this is going to go up and all it's doing is generating sell-side liquidity here, then these pivots should be protected unless it's going to stay sideways where it's going to generate liquidity on both sides and then sweep both sides, which could definitely be done. I've got to start this process of waiting for the trade to play out. Waiting for the trade to play out is the hardest thing for some of us. Let the trade play out. Let it come stop me out, or let it hit the target, or at least let it go up high enough where I can break even. It's got to at least come up to this first target area, and somewhere near this first target area. And complaining about it and being negative is not the right idea. I know a lot of traders that just complain and speak negatively about the trades, about stuff that happens to all of us. Getting ticked out by one tick, that happens to everybody. Having trades go against you as soon as you get in it, that happens to everybody. There's no sense in speaking negatively all the time and having a negative spirit about it. I'm perfectly okay if this were to come stop me out, and I have to be. And then I'm going to spend the rest of the day, or at least the rest of the silver bullet. We might be done with the silver bullet moment after this, because I don't see, if it's going to go sideways like this, then it's not going to really do much. It looks like a nice bull flag, though, doesn't it? Still, even if it were to form a longer kind of flag, it could, if it formed a flag, it could still kind of come down further. I don't really want it to come down to stop me out, but I understand now that I'm going to have to go through this waiting period and mandatory trade period where you have to let the trades play out, and you have to get used to that. And I'm not used to that. I'm not used to bearing the full loss. I'm not used to staying in the trade. I'm not used to waiting it out. I'm not used to any of that. And I got to get used to that. I got to get used to losing. And I got to make it part of my framework of thought that it's okay. I've already accepted that. It's probably not going to help to just keep winning right out of the gate either, over and over. Until you learn to lose, it's really not, you're not winning really. Because at some point it does hit. The losses will happen, and if we're not ready to process that, then we're not going to be good traders. I will tell you, this is one of the most boring trading sessions I've ever had. Complete and utter boring. Boring, boring, boring. The MES. I wonder what the others are doing. The NASDAQ is kind of following the same process. All right, are we getting something here? All right, something's moving. I've got to let it play out. I've got to let it play out even if it loses. I've got to let it play out. I see a trend line up there that it's having some struggles with. The question is it going to break out of it or is it not going to break out of it?
Target filled.
All right, I'm closing the position because I think it's going to be a flat day. It's got this trend line in the way up here on all these time charts, and I'm not confident that it's going to keep going. Now, that could be a big mistake, and we'll find out. But if it drops down low again, I might pick it back up in a lower range. If it comes back down here, like I could even put an order in,
Order submitted.
buy a limit order down here. I'm not confident that it's going to go up right now. So I lost my confidence on the trade. So there's no reason for me to stay in it. Like, I think it can come back and fill in some of this area in here before taking off. If it takes off, I don't think it's going to go straight up from here. It's way too lethargic today. I want to mark where I sold it, though. Right there. And this is kind of going against what I need to be doing, and that's learning to hold the trade. Learning to hold the trade. And, if I get a chance to get back in it at a lower price, I'll probably will get back in it. If it takes off from here and hits my target, I'm going to be really upset. Going to be really upset. So that stop loss was 5.25 points. That's not too bad. 29.75, 24.50, 25 to 6 to 7, 28, 29. Yeah, okay, that's helpful. I hope it. Well, I actually hope that it does go up. That'll remind me that I should have stayed in this trade. Man, I got to get that in my mind. I have to develop the patience to let trades play out. And even if I would have waited till it got halfway or 75% of the way and break even on the trade, that would have been better than. I've got to get to that point where I'm holding the trades. If it's a good setup, if it looks good, just stay in the trade. I've got to get to that point. If I don't, I'm never going to get professional. Okay, so if each point's $5 on the micro, if I had two contracts, 1 times 5, 5 times 5, 25, that'd be $50 loss. A $50 loss for this strategy where I'm adding to my position, averaging my price down, and then getting out by that same measure. If it continued to go down, I'd have to just get out. It would not have worked, and that would be the way to get out of that trade. What a beautiful roll. I mean, it's doing so nice. I mean, it's just lovely. I got to get more used to staying in the trades. I've got to. Where we at on this? Let's see what happens when it gets to that trend line, because it's just now getting up there on a 10,000 tick chart. It's trying to break through it. We might get a pullback here where I can get back in it. Oh, yeah, I could probably be breaking even pretty soon here on that trade if I didn't get out. That's disappointing, but what's good about it is that I got in a trade that looks like it was half decent. Following my moving average strategy where all the moving averages are going up in the same direction. I guess one flaw of the entry was I got in at the top of this trend line, right there on that trend line. And that was the high point premium time to get in it. And if I would have waited, I got to be more patient about my entries, but if I need to get in a trade because I think it's going to take off without me, then I have to be able to go in smaller and be willing for it to drop down into an area where I can add. That's all planned out, not desperately adding to a losing trade. That's not what I'm talking about here. I'm not going to chase it now, unfortunately. It'd be great to see that it goes to my target. If it goes to my target after all, that'd be great to see that this could have been a winning trade if I didn't get out early. And understand a couple of variables here. One is that I should have waited when I saw it at the top of this trend line, not enter at the top of the trend line, wait for it to pull back. But I did figure that since it's already shook out some things here, that I would be okay by getting in here. I do like that I kept my stop loss down far enough instead of entering in on the real tight stop loss where I would have been shaken out anyway. Probably too scared to get back in it. And even here's a better place to enter in. Might have been a lower price, but the trend line break where it reverses on this red candle here, I like that. And then it comes back down to test it again. I should have noticed that. That's not the time to be getting out. That's the time that it looks like it's going to shoot up. So let me make some notes here. Today's trade, today, Monday the 4th. Monday, analysis. How did you feel about your trade? Okay, let's write this down. Overall, the idea was good, because I'd be break even now. Although I closed early. Let me make sure the trade's still going pretty good here. Yeah, it's almost at my target. I'd be on break even at this moment. So to me, it's still a good trade, even if it fails from here, because I would be on break even, and I like break even trades. Let me remove this order.
Order canceled.
Okay, overall the idea was good, although I closed early. I must make myself hold and let the trades play out. I did enter the trade high at the trend line. And I should have let price pull back, because I would have been in the green most of the time instead of being in the red most of the time. I did not notice the retest of the trend line, and that is where I got out. I got out at the wrong place. When it popped up, and see, when it popped up here, it didn't stay above it. It kept pushing below. This time it broke above it, and it tested it, and it stayed above it. And this change of direction, this is a change of direction, change of character even. It looks, you can just feel and sense that this is much different. And that's where I got out. I figured it was going to pull back some more. But you could see the angle and shape of the moving averages telling us that there's some momentum in that. Now here it is at that trend line that I've been concerned about. It made it to about 65% of my target up there, almost, 65%, maybe 75% of the way up there. I'd be on break even right now if I didn't get out early. So yeah, that trend line that it's battling on that higher time charts, I still think that it could come down and correct. I really do. I do believe it's going up to the top. I believe that's where it's eventually going to go. But I would not be surprised. I mean, this thing could really, honestly, this thing could do a number on you. This thing could you know, do one of these. And then go up. And here it comes. I mean, that would put us at a sweep even lower than these two pivots here. And if price can do that. Price can do that. It can take the highs here, come back, take the lows here, then start to put in higher lows and break out after that. It could stay in between these two moving averages, trend lines for a while. This strategy was above 90% run rate, so this will keep me out of trouble in the long term. The most important thing is picking your spots wisely, which is one makes sense. I wouldn't be surprised if it goes all the way up to the target and hits it. We're almost at the end of the silver bullet session. That's what these blue lines are. We're towards the end of that, and I'm not going to live stream beyond that. I am going to upload a video about this entire trade and keep it real small, short little video about the trade and what I learned from this today. And it'll be great to see the end result at that point. So I'll let everybody know what happens. So far, we're going to close the live stream. God bless you. And take care. Peace.